VST Tillers delivered strong sales for the month of February. The company reported sales of over 4,000 units for the third consecutive month. The tractor business, though, has seen some pressure on a year-to-date basis. To discuss the sales sprint, the trends and the outlook going forward as well, we are now joined by Antony Cherukara, who is the CEO at the company. Antony, good morning. Thank you so much for joining us. Well, yes, it's the third consecutive quarter where you've seen sales of more than 4,000 units, but they've been declining on a month-on-month basis. Can you tell us what is the sustainable trend, why this decline, and how is demand right now on ground?
Good morning and happy Women's Day to both of you. And talking about the decline, agriculture is a seasonal business. So there are seasons when before the sowing season, the industry goes up, the sales is up, and then you have sessions where the crop is already planted, and then you will have the business coming down. But this is purely seasonal. But looking at the trend, the reservoirs are full, the minimum support prices are high, the cash flow is happening in rural India, and this all augurs well for agriculture in the near term.
Okay. But sir, year to date, your tractor sales are down almost 18%. Year to date takes into account the last monsoon season as well. So could you explain that weakness? And because your peers are not reporting such weak numbers, the other players in the tractor market, and when should we expect a recovery?
Yes, VST Tillers tractors is present in the compact tractor industry, which is only 90,000 of the 900,000 tractor industry that is there today. So we have not seen growth in the compact tractor space. And hence there is a drop, and also there was a delay in a couple of product launches that we had planned, but we expect to end flat this year because the international business has grown while the domestic business has shown a little decline. So we are expected to end flat this year on the tractor business.
Okay, you're expecting a flat growth in the tractors business. That means you're expecting substantial recovery to come back in this month itself. On the power trailer side, sales are strong. That is one segment that has done well for you, 14% up on a year-to-date basis. Is that continuing? What is the outlook going forward as well? And if you talk about demand in the rural segment especially, are you seeing any weakness?
The demand is likely to continue. As I said, in the near term, all the demand drivers look good. The reservoirs are full, the minimum support prices are high, and the cash flow in rural market is good. So all these augurs well in the near term. But there is, of course, the talk about El Nino and how it plays out during the coming monsoon. And so fingers crossed for Q3 and Q4 of next financial year.
So you had earlier guided for a 20% growth in the tiller segment. Is that something you'll be able to do, or will it be better than that?
Yeah, I have given a guidance of 15 to 20%, and that we will be achieving for the tiller segment.
Just getting back to the point about tractors, I understand that compact tractors has not done well, which is where you operate. The industry growth has not been there. But over the medium term, would you look to expand your scope, perhaps get into specialty tractors, utility tractors, any other forms?
Absolutely. So we are on the verge of launching utility tractors with our joint collaboration with Zetor, which should be launched in the first quarter of the coming financial year. With this, we will be entering into the larger horsepower space, wherein we will be participating in the larger segment of the tractor business.
Okay, and this launch is going to take place in Q1 of FY24, the April to June quarter.
Correct.
And what is your manufacturing ability?
You're right.
Okay, and what is the manufacturing capacity of these utility tractors? How many will you be able to produce?
Currently, we have a capacity of 30,000 tractors that can be manufactured, which includes roughly about 15,000 compact tractors and 15,000 of the larger utility tractors. So we have sufficient capacity for the next couple of years. We should be able to look at new capacity after 2 years or so.
Okay, after 2 years. And what is the capex you have planned for any capacity expansions that you'll be undertaking? It will not be in the near future, you mean?
In the near future, nothing on capacity expansion, but our capex on product development and setting up an R&D global tech center is on the anvil, which we are looking at close to 100 crore capex in the next coming financial year.
What we are understanding is that from your current capacity of tractors, half of it will be used to manufacture compact tractors and the other half will be used to manufacture utility, right?
You're right.
Okay, so this will not be incremental sales or, very much by incremental revenue for you.
Yes, incremental revenue on, on the larger growth would come from the utility tractors, which we would be getting into in Q1. So you will see in the next couple of years or in the near medium term, the larger revenue impact is going to come from the higher horsepower tractors we are launching in the market.
Okay. So what would that mean in terms of revenues and margins? Will that particular product profile also bring in higher margins for you? 9 months, your revenue is up 7.5%. Tell us what will you end this year with? What is the outlook for FY24 and margins as well, because they were under pressure in 9 months?
Yes, there has been a commodity inflation driven pressure in the first 3 quarters of the year. In Q4, we are looking at cooling off on the commodity prices. So this should impact us positively in the last quarter. So we expect to be in the guidance range of 12 to 14% that I've spoken about earlier. And going forward, with the launch of new products, there would be a margin pressure. So the guidance is revised to 11% to 13%. However, what we are looking at is increasing the top line and the total earnings for the company. So it is a growth-driven model that we are looking at, and that is the ultimate goal for VST.
So FY24 revenue guidance will be, margin guidance is 11 to 13%. What about on the top line?
Yeah, so we have maintained a CAGR of about 20 to 22%. We expect this year also to be closer to that 20% mark.
Any other product launches? One, of course, is the utility tractor in Q1. Any others that we should expect in the next 12 months?
Yeah, yes, we had announced, supply to some of our technical partners in the electric platform space. We should be ramping up the supply to them in the coming quarters.
Okay. You had earlier told us as well that you're looking at expanding in the Latin American market, the African market. What is exports as a percentage for you, and what kind of expansion are you seeing there? We are talking about this headwind that is coming in from the export markets. Are you facing that as well?
Yes, in the first 2-3 quarters, we had an headwind with the Ukraine war and predominantly our exports being to Europe. So we saw a pullback in terms of orders, but now what we are seeing in the last 3 months is the orders are back. Surprisingly, there is a growth that is expected in the international business in Europe. The focus is on Latin America, Africa, with the launch of utility tractors and 4-wheel drive tractors, which we are expecting to launch in the next financial year. We will be playing a larger role in these 2 continents as well.
We'll leave it at that. Thank you very much, Mr. Cherukara, for joining in. That's the word of coming in from VST Tillers and Tractors. The focus appears to be more on top line rather than on margins. On margins, they are making investments in new product launches, which will boost the company's top line. Get into a break. On that note, on the other side, we'll discuss commodities. As always, Manisha Gupta will be joining in next.